Hi, everyone. This is Jason Bjark of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He's author of the best-selling book about the global economy called The Big Reset. It has over 100,000 copies sold in, I think, over 8 languages. He's the founder of the Commodity Discovery Fund. Willem Middelkoop, thank you for joining me again.
Yeah, great to be back, Jason.
Willem, there's so much going on in the global economy. I want to ask you about the banking crisis or the potential banking crisis going on right now. We see the stock price in Deutsche Bank. Do you think that this is going to spread and we're going to have a potentially worse banking crisis than 2008?
Many investors look to see financials going down actually since the start of this year. It all started with Deutsche Bank, as you said. Deutsche Bank has been weak also late last year, but it was really from the beginning of this year we saw not only Deutsche Bank but also Citigroup and JP Morgan and some other financials being hit pretty hard out of nowhere. And at the same time we saw gold mining shares, silver mining shares going up substantially. We made a new low for gold and silver related equities January 13th, and since then the broader precious metal equity related index jumped 60% in just 3-4 weeks. So many investors are asking themselves what's going on behind the scenes.
Now, in terms of the banks, do you think a lot of the reason the bank stocks are going down so much, do you think the market is worried about their exposure then to this oil debt that's going bad? Because the oil price staying this low, it's been a surprise to so many different people.
Yeah, because the downturn in the oil prices is taking longer than expected. Many analysts expect that there will be huge write-downs in loans to energy-related companies. These write-downs could total maybe over $1 trillion. So this is a severe risk for financials, and it's severe risk because of contagion risks for the financial system. And I think that's the main reason why you see these nervous reactions since the start of this year.
Do you think then that there's still good value maybe for longer term investors in the oil market, that there are some good oil companies that don't have as much debt that are being unfairly punished because so many oil companies do have too much debt?
I think the energy complex is very undervalued now, and markets tend to overreact on the upside and on the downside, and we all know that oil prices south of $30, are unsustainable. Even I think south of $40 is unsustainable because we have too many projects now which have a all-in sustaining cash cost of $40 or $50 or more. So if you have a longer-term horizon, you could start by picking up some of the undervalued best energy stocks. But often it's better to wait for the confirmation that the bottom is in. And I think we're very near, but we could get one more leg down towards the lower 20s. But maybe we've seen the bottom already.
Yeah, I think there's a lot of paper barrels of oil out there, just like there's a lot of paper gold and paper silver. There's not as much paper oil as paper gold or paper silver, but this oil price is unsustainable. I think I've seen estimates, Willem, that say up to 90% of all the global oil production is totally uneconomic at these prices, and yet we haven't seen the producers of the oil, whether it's governments or the private companies, we haven't seen them cut back. Are you surprised we haven't seen any major supply cutbacks yet?
Well, if you study the latest production figures, then we have had a reduction in total U.S. oil production of around 500,000 barrels per day. So there is some destruction ongoing in the oil production. And if you know that the overcapacity on a daily basis in the worldwide oil markets is just 2 million barrels per day, then a oil production destruction of over 500,000 barrels is quite substantial. And the latest prognosis show that in 12 to 18 months, supply and demand will be very close. So I think within the next 12 to 18 months, you can expect oil prices to really move back up towards the $50 range.
I want to ask you about China now. You went on a long trip over there. I saw it in another one of your interviews with Grant Williams, which was great. Now, China just got the RMB into the SDR, but I guess it's a process, or it doesn't go into effect until, I think, the end of 2016, towards the end. How long do you think it's going to take to have a major impact on the global economy once the RMB does start going into the SDR basket?
By adding the Chinese currency, the renminbi, into the currency basket of the IMF, the special drawing rights currency basket, this is more a political or almost symbolical step than a real step which will have quite severe consequences for the economy. But it will increase demand for the renminbi because the renminbi will be more attractive to add to financial reserves for central banks outside China. But I think you should see this step as one of the first steps leading towards more changes within the international monetary system. More changes can be expected in the next few years and even the next decade. This is a process which can take a little longer than expected. These changes within the international monetary system, they always tend to take a little longer than most people foresee.
That's a great point. And we've seen Russia start to take RMB for their oil. We've started to see these other deals where oil-producing countries are not taking as many U.S. dollars. So the petrodollar hasn't died yet, but we're seeing, the writing on the wall. We're seeing kind of the death by 1,000 cuts, whether it's with the RMB into the SDR or other countries accepting RMB for their oil, that these signs, over the next decade or two, the U.S. dollar's position as sole world reserve currency, it's not going to be there.
Well, the dollar as the world reserve currency is clearly under pressure. And in China, they love to talk about the de-dollarization of the world economy. And it's true, the Chinese, they have initiated these currency swaps with dozens of countries now. And this is really a problem for the U.S. And since the start of the Asian Infrastructure Investment Bank in 2015, and the strong support from countries and allies, especially U.S. allies like Britain and other countries in Europe who are supporting and founding members of the Asian Infrastructure Investment Bank, the risk for the dollar as the world reserve currency are getting larger. And Larry Summers, who is a former Secretary of the Treasury in the U.S., he even wrote in an opinion piece in April 2015 that the start of the Asian Infrastructure Investment Bank may be remembered in the future as the moment the U.S. lost its leadership in the economic world.
That's very interesting. And yeah, Larry Summers is his theories, his opinion carry a lot of weight with the people at the Federal Reserve and in the U.S. Treasury Department. His Gibson's paradox there with that he can manipulate the gold price and that would keep interest rates under check.
Yeah, he's a real insider. He's a real insider. So when it's his analysis that the U.S. may have lost his role as the underwriter of the global economic system, these words should be taken very serious.
Now, we're also starting to see a lot of the U.S.'s trade partners and also sovereign wealth funds are starting to dump U.S. equities. They're starting to dump massive amounts of U.S. treasuries. Do you think this is because they want to transition to the next system, or do you think this is because they need to raise cash to protect their own economies because the global economy is in peril and, they have debts to pay and things like that?
Well, we had a huge rally in the dollar in the last year or so, and I think many investors are wondering whether the dollar has formed a top now and might be going down in value for years to come. So this could be a reason why you would sell some dollar-denominated assets. And I think another reason is that U.S. equities have been going up for 5-6 years now, and the valuations are quite stretched if you compare to valuations in other parts of the world. So the U.S. likes to boost that they have this strong recovery, but if they would have had a strong recovery, the interest rates would be 4% now, not almost zero.
That's a good point. And the other thing I think where the U.S.'s jobs data are lie, the GDP data is a lie, is almost all the high-paying full-time jobs that were created in the U.S. were all shale oil, shale gas jobs out since 2008. And now a lot of those jobs have been lost. We look at the firing, the job losses, and they're all coming from North Dakota, Texas, and Oklahoma, which is where all the job creation was since 2008.
Yeah, there's also a risk which you see in Canada. Canada has many mining and especially energy-related, oil-related jobs, and of course we see weakness in the overall economy coming from China, coming from the energy sector. Europe was recovering in the last 12 to 18 months, but I expect more downward pressure on the economy and on stocks later this year.
And I think any downward pressure in the regular asset markets will start to benefit gold. A lot of the mainstream people, not people like you and me who like gold, but people who maybe bought gold a little bit in the past and then sold it, they're starting to dip a toe back into the gold market. At least that's what we're seeing with Mark Cuban and Stanley Druckenmiller and those types of names.
Yeah, if you compare valuations, the price to book value for gold-related equities is 1, and the price to book value for general equities is almost 2.5, 3. So there are some smart investors who are looking to these ratios, and they think that after a correction which took gold down over 40% and silver down over 70%, and these gold and silver-related equities were down 80%, they tend to think that this correction might now be over. And if you look at the charts, if I look at my charts, I think we've seen the bottom in gold and silver. And we're in the process of starting a multi-year new bull market. So there's quite some new money flowing into this sector. And because it was beaten down so much and you have some short covering, you have these strong moves up. And I think we could see some more gains in the near future.
Yeah, I think the bottom is probably into. I think there were going to be major problems on the supply side from the miners who weren't in, these developing countries, because in the developing countries, those currencies were weak against the dollar, so the price of gold and silver was up. But the dollar gold and silver bull market, it looks like it's finally restarted again.
Yeah, I agree, because gold had been breaking out of the downtrend in almost all the currencies already in 2015, but now it's over the 200-day moving average. I think you can speak about start of a new bull market also in dollar terms.
I want to ask you about the Shanghai Gold Exchange. Why do you think China would decide to stop reporting the withdrawal numbers if they actually stop doing so?
Yeah, I didn't study it in detail. I read some reports, but I think the most important thing to understand is that there's a huge future gold market in Shanghai, the Shanghai Gold Exchange. But compared to the paper gold future market in Chicago on the COMEX, where only 1 in 200 contracts is physically settled. I think in Shanghai, 1 in 3 contracts is physically settled. And this has created a yearly demand of over 2,000 tons. And these figures are staggering, because if you compare with total worldwide gold production is only 3,000 tons. So we have now 2 countries, India and China, who have a total demand which is well over the total world gold mine production.
Yeah, I don't see markets that can stay that can stay where the price keeps going down, where demand looks strong for the actual commodity. There are supply problems. The miners, the producers of the commodity aren't making any money, and the price keeps going down. So that market was just totally irrational for a while, and it just seemed like it was unsustainable for the paper price to keep going down.
Yeah, I think that analysis is correct. I always tell my audience, if this would be the potato market and all potatoes would be sold to India and China, the price of French fries would be going up, and it sorry for this, but I have a phone call. So it's very hard to understand that the price of French fries would be coming down when demand for potatoes is so large.
Now, I want to ask you about silver. We have the base metals in an enormous correction. They're in an enormous bear market. We've seen some base metal miners shut down, but a lot of large copper mines are still going to come online. Do you think silver is going to be the silver byproduct, which is so much of the annual silver supply? Do you think a lot of this silver is going to stop being produced with base metals, either staying low or keep going lower?
Well, silver price has been coming down 70%. We have seen very strong demand for silver, especially from India and China, and even the US is importing silver now. The sales of silver coins have been breaking records. Silver is one of my favorites, and compared to the gold market, you don't have these huge above the ground supplies available. So silver is one of the metals which could really surprise to the upside, and I think silver on the supply side, it's an accident waiting to happen before real shortages will appear. I think we'll see real shortages before 2020.
Now, as the gold price and silver price start to go higher in pretty much every single commodity, do you think these greedy governments, which are looking to tax everyone more and more, we have negative interest rate policy, do you think they're going to come up with some type of windfall profits tax or confiscation scheme in many different countries?
Well, I don't expect confiscation schemes, because that's a very hard thing to do, and we always have to pretend that we have this free market and we have a capitalistic system. But when gold price would move up substantially, say north of $2,000 or $3,000, then you can expect a windfall profit tax for the industry, but the profits are still very poor, so it's not a concern for me at this time.
Yeah, I would agree. Yeah, we're starting to see a few governments like Canada and Mexico, even though the commodity prices have not done well for a while, they're going after a few mining companies here or there, but it's not been industry wide. When the gold and silver prices were higher, remember the thing where they were reporting the cash costs the miners were, and some of these governments were saying, hey, look, your cash costs are low, you guys should be making a lot of money, we're going to increase the taxes on you, but the miners were lying about their costs. The cash costs weren't their real costs.
Yeah, I agree. That's true.
In terms of an investor to make money in a commodities bull market then going forward, do you think the commodities bull market is basically over except for precious metals, or do you think then there's still going to be some long-term commodities where people, if they have patience for a couple years and they start positions in the next year or two, that they can still make some money?
Well, when we do our supply and demand studies, we always find that around 2020 we'll see serious production deficits in many metals. We'll see production deficits in platinum, palladium, copper, nickel, zinc, gold, and silver. Uranium and diamonds could see production deficits after 2020. So the perfect storm against commodities in the last 1 or 2 years could well turn into a perfect storm, helping commodities to reach levels which will be much higher, because we'll see the first shortages.
My final question, Willem, before I let you go, has to do with your book, The Big Reset, and any conclusions. Are we going to be talking about in 10 years from now that the global economy is still, slugging along, that the people in power, the central bankers, the Bank of International Settlements, that they've come up with patchwork solutions to keep the game going for many years longer? Or do you think that a full global economic reset is going to happen sooner than 10 years from now?
Is very difficult to draw a timeline, but we can expect many more unorthodox monetary policies in the next few years. These unorthodox policies are part of the financial endgame within the current dollar system. At one point, the current dollar system has to evolve and go towards a new phase. In this new phase, the SDR, the special drawing rights of the IMF, could play a much larger role. Now the renminbi is added. We know we need a debt restructuring in most of the advanced economies. Even China may need a debt restructuring at some point. We need to find a new anchor for the international monetary system, so that could be the SDR. But I'm quite sure when you look back 10 years from now, so 2026, that some major changes have occurred within the system. But the process of change might take a little longer, and the big reset could consist of several smaller steps instead of one big major reconstructing over one weekend.
Yeah, I don't think anyone knows behind the scenes what the system is going to be like. I mean, they've tried so many different schemes, like you said, with the currency swaps, and they're doing reverse repos now to try to prop up asset prices and also the treasury markets. God knows the additional schemes that they'll come up with to buy themselves even more time. I'm sure they're plotting them right now whenever the central bankers meet.
Yeah, so more unorthodox monetary stimulus and actions by central banks can be expected, but they're pretty well stuck in a corner now, so they have to come up with some very creative solutions.
I agree, and I think the central banks are trapped, like you said, and unfortunately I see the middle class, the mainstream people, the people on Main Street in the U.S. or in your country or in Europe, I see them getting screwed the most. So I see, taxes being layered on. I see, the Keynesian central bankers talking about deflation, but here they are, layering on new types of taxes in the U.S. The politicians that are running for election now, they're talking about value-added taxes. So that's not deflationary if the guy on Main Street, if his paycheck, they're taking more taxes out of it. Okay, well, I just want to thank you again for your time. Where do our listeners pick up your book?
It's available on Amazon, but they have to make sure that they buy the revised edition. I just published a revised edition. It has some great new information, so be sure you buy the revised edition of The Big Reset. Great,
and maybe one of these days I'll get you to do an English audiobook. Hell, maybe I'll even read it for you.
That would be a good idea.
Okay, well, thank you, William, for your time.
Thank you, Jason. Bye.